In 2024, the U.S. housing market is an intricate tapestry of regional trends, each telling its own story. Understanding these trends is crucial, and the power of graphs in understanding the U.S. housing market has become more relevant than ever. Everything you could want to know about current U.S. housing market conditions can be found and graphed in the data available online. As we see some regions like Albany and Grand Rapids gearing up for growth, and others like coastal Florida potentially facing declines, what should we expect for the overall housing market? Influenced by variable mortgage rates and housing supply challenges, this year's market underscores the importance of visualizing and interpreting these complex dynamics through graphs and data. Stay ahead in the real estate game by grasping the power of this analytical tool. Let's start with U.S. home price trends. Home prices are expected to rise in most U.S. cities, but at a slower pace that aligns more with historical norms. This growth could vary significantly across different regions, with prices likely to fall in some areas like parts of coastal Florida and rise in others like Albany, New York and Grand Rapids, Michigan. The overall trend suggests a rise in home prices by about 3 to 4%, though this growth may slow down later in the year due to factors like rising interest rates, an increase in home supply, and affordability challenges for buyers. If you are a longtime subscriber, then you know I often discuss U.S. housing market conditions because many of the national factors impacting home prices affect you locally as well. If you're not a subscriber, please click the thumbs up like button and subscribe now so that you get all my new content when it's fresh. If you really want to know what's going on in housing, to see and hear the data explained, to evaluate the facts and ignore the hype that is so prevalent online, then subscribe now and I'll keep you in the know. Next on the agenda is the impact of mortgage interest rates. Mortgage rates continue to play a crucial role in shaping the housing market. While there's hope for a decrease in rates, their movement will be a key determinant of home pricing and sales dynamics. Should mortgage rates significantly drop, we could see a surge in buyer demand, potentially driving up home prices. Conversely, increasing rates may lead to reduced buyer demand. However, contrary to a common belief that rising rates cause home price declines, due to the current housing supply and demand dynamic, increasing rates are more likely to slow the growth in home prices rather than cause them to fall. This is because when buyers withdraw from the market due to high mortgage rates, the primary source of new listings, homeowners selling to buy, diminishes. Therefore, a decrease in demand often leads to a parallel decrease in supply, maintaining a balance that prevents substantial price drops. Let's focus on housing supply and new construction for our third graph. The national housing shortage is expected to continue through the end of the 2020s. There's been a gradual increase in single-family housing starts throughout 2023, but it'll likely take years of accelerated new home construction to narrow the supply shortage gap significantly. The anticipated increase in new construction in 2024 is a positive development, but it's unlikely to significantly alter the overall housing market dynamics within the year. The prolonged shortfall in new home construction since 2008 has led to a housing shortage, exacerbated by a growing population. This scarcity has been a major factor behind the escalation in home prices and rents. The upcoming uptick in construction might start addressing this issue, but given the depth of the shortage, it may take more time to see a substantial impact on the market. Buyer and seller dynamics have changed greatly over the past 25 years. The market in 2024 is predicted to favor sellers due to the ongoing national housing shortage. However, with potentially lower mortgage rates and a slight increase in housing inventory, buyers might find some relief compared to the previous years. The interplay between buyers and sellers will indeed be a critical factor in shaping the 2024 housing market. This graph indicates a slight increase in the average monthly supply of homes for sale, moving above the 32-year low seen 2 years ago. However, the current actual supply of homes at 1.13 million is still 72% less than the peak during the housing bubble over 15 years ago. This data underscores the resilience of home prices against significant drops, even with fluctuating demand. The current market conditions highlight a pressing need for more housing in the U.S. This is evident from the increasing homelessness rate, decreasing vacancies, and escalation of both prices and rents to levels that are increasingly unaffordable for many. The supply-demand dynamic illustrated by this graph is essential for understanding the U.S. housing market's current state and future trajectory. It's a crucial indicator, a power graph, providing insights into market stability and potential future trends. Our final graph emphasizes the fact that regional variations and external factors weigh heavily on your local market conditions. The housing market's performance will vary significantly across regions, influenced by local economic conditions, climate risks, and housing policies. External factors such as economic unpredictability, financial market volatility, and geopolitical situations could also influence market dynamics. While Zillow predicts that fewer than half of all U.S. markets will see rising home prices, the persistent imbalance between supply and demand will likely continue driving overall growth in U.S. home prices. This imbalance, marked by a limited supply against a backdrop of growing population, can exert significant upward pressure on prices. I recommend closely monitoring your specific market's local supply and demand dynamics. These local factors are crucial in determining the direction of home prices. Housing markets can vary widely from region to region, and understanding these nuances will provide better insights into potential price movements in your area. Keeping an eye on local trends, inventory levels, buyer demand, and economic factors will be key to making informed decisions in the housing market. As 2024 unfolds, the U.S. housing market continues to navigate a complex terrain. While regional disparities mark the landscape, with certain areas experiencing growth and others facing declines, the overall trend leans towards a moderate increase in home prices. This nuanced market dynamic is driven by fluctuating mortgage rates, a persistent national housing shortage, and an evolving balance between buyers and sellers. With economic unpredictability and external factors playing a crucial role, staying informed and adaptable is key for anyone involved in the housing market. For the latest insights, trends, and detailed reports on the U.S. housing market, we invite you to subscribe to our YouTube channel. Stay ahead of the curve in 2024 by subscribing and tuning into our comprehensive, up-to-date analysis, forecasts, tips, and recommendations for home buyers and sellers. Your real estate journey deserves the best information. Find it on our channel. If you want to see a video featuring my 9 tips for buying a home in a highly competitive market, you can view it by clicking on the box in the top left corner of your screen. To see a popular video featuring my top 6 home selling tips, just click on the box below it. Please remember to like this video, check out the links below it, and subscribe to our channel so that you never miss anything.